Hi, my name is Ken Krajewski. I'm the Vice President of First Nations Reverse Mortgage, a reverse mortgage lender based right here in Michigan. My NMLS number is 168561. I'm here to talk about the facts about reverse mortgages and let you know how they work, how the process is, and how you can qualify. We'll be talking about what the traditional reverse mortgage is, which is called a HECM, or a home equity conversion mortgage. This reverse mortgage is an FHA insured reverse mortgage, and it's a special home equity line of credit that allows homeowners 62 and older to access the equity in their home to create cash flow, to pay off debt, or to help pay medical expenses, property charges, other housing expenses. Typically, qualify for a reverse mortgage, you have to be 62 or older. You have to own a home. The home does not have to be free and clear, which we will talk about. But technically, it is a mortgage. That is one of the biggest misconceptions about reverse mortgages, is people believe, or there's a conception out there, that people no longer have ownership of their home. That is not the case. With a reverse mortgage, you still have full rights of ownership. You are on the title of the home, and you can sell the home whenever you want. You can make payments on a reverse mortgage whenever you want. There is no penalty to do that. Typically, the most typical reverse mortgage that's offered in the industry right now are home equity lines of credit. Works like a traditional line of credit that you may have had in the past, where there is a credit line. It is a lien on the property. The line of credit can be accessed for whatever you need it for. You can take draws from the line of credit. The draw becomes part of the balance. You do get a statement every month, just like you normally would on any traditional mortgage. The difference is, on a reverse mortgage, payments are not required while you remain in the home. Payments are absolutely optional. You can make payment whenever you want. You can pay it off whenever you want. There is no minimum payment required, but people can make payments as they choose. You can make a $50 payment one month. You can make a $500 payment one month, or you could choose to never make a payment at all while you remain in the home, and that's the option that most people choose. We'll talk about what happens to the home once you leave it permanently. The most popular use right now for reverse mortgages is paying off traditional mortgage debt. Basically, what that means is there are a lot of people, 62 and older, that moved into retirement with a mortgage. A lot of these homeowners are living on a fixed Social Security income, maybe a pension, maybe some assets as well. But having a mortgage in retirement is something that can certainly impact the quality of your life. And that mortgage payment may be a fixed payment for the next 30 or 20 or 15 years. And most people that get a reverse mortgage right now are using that reverse mortgage to pay off traditional debt. And I'll give you an example. Typical borrower may own a home that's a $300,000 home, and maybe they have a $150,000 traditional mortgage, and that $150,000 mortgage may cost them $700 or $800 a month. What they'll do is we will refinance, or they can refinance that traditional mortgage, turn it into a reverse mortgage. What that means is, instead of owing a mortgage that is a forward-paying mortgage, meaning that you get a bill every month, you make a payment to the bank, and the balance comes down a little bit. Instead, you now have a reverse mortgage, which means you still own the home, you're still on title, you still get a statement every month, but a payment is not required. So that $800 mortgage payment that somebody had last month now turns into an option of not having a mortgage payment at all going forward for as long as you live in the home as your primary residence. And basically freeing up about $800 a month in cash flow. You're no longer sending a check to the bank anymore. You're keeping that money in your household, and you can use that for other benefits. But that doesn't mean the reverse mortgage is free. What's happening is instead of making a payment and your balance going down a little bit, you can choose not to make a payment, and the interest that you would normally make, the interest that is accruing on the loan, gets added to the amount that you owe. So that the interest is going to get paid. It's just not going to get paid while you're living there as your primary residence. It will eventually get paid when you leave that home, or the homeowner leaves that home permanently. Typically, that happens when the homeowner passes away, or if the homeowner sells the home. At that time, the note becomes due, and it's typically paid off by the sale of the home, and at which point it's a standard real estate transaction where the house, if the homeowner sells the home, the house is sold. Any liens that are on the property get paid off through the sale of the house, and any equity that's left always belongs to the estate or the heirs or the homeowner. A popular question that's asked is, what happens if there isn't any equity left over, or what happens if there's a negative equity position? For instance, somebody has a reverse mortgage for 10 years. Using an example, maybe 10 years later they owe $300,000, but the home is only worth $250,000. That means there's a negative $50,000, there's negative equity of $50,000. What's really powerful about reverse mortgages is because they are FHA insured, the FHA mortgage insurance guarantees the homeowner or the estate or the heirs or the children that they are never responsible to pay back more than what the home sells for. So again, using that example of a home that reverse mortgage is owed $300,000, but the home only sells for $250,000, the property or the estate is never responsible for that $50,000 in negative equity. That's what the FHA insurance is for. So you cannot leave your children with a negative equity burden. If you sell the home and move and there was negative equity in the property, you're not going to be required to pay that negative equity position back, and that's a very powerful benefit to the reverse mortgage. We did talk about the option of paying off a traditional mortgage. That is the most popular use right now that we see reverse mortgages being used for. It's very powerful if you own your home free and clear. For example, a typical borrower may have a $300,000 home, and they qualify for a line of credit of maybe $150,000. That line of credit it acts like any other home equity line of credit out there. You're not being charged interest on any unused portion, or I'm sorry, you're not being charged interest on any unused portion of the credit line or any credit line that's not being used. But as you use the line of credit, you can use a line of credit for whatever you want. You can use it to help pay for property taxes. You can use it to help pay homeowners insurance, maybe pay off car loans or credit card debt. You can use it to travel. You can use it for unexpected expenses, such as a furnace goes out, air conditioning goes out, maybe you need a new roof. Those are popular uses that we see our customers getting these lines of credit. They make draws off of it as they need it. That draw becomes part of the balance, and the balance is what is accruing the interest. Again, people do get a statement every month. They can make a payment to the lender so the interest doesn't accrue. If they choose not to make a payment, then the balance continues to increase. What's nice about these lines of credit is they're easy to manage, they're easy to use. The money gets wired directly into your designated checking or savings account. So as you take a draw from the line of credit, you make a request for the dollar amount that you want. That dollar amount gets wired to a checking or savings account. You use it for whatever you need it to, and then the next time you need a draw, when that money runs out, you ask for another request, and again, the money gets wired directly to your checking or savings account. Now, what happens in a situation where somebody leaves the home permanently? Typically, FHA allows 6 months for the loan to be paid back. Typically, the loan is paid back through the sale of the house. They do allow 2 extensions of 3 months each, which are typically approved. So most people have a situation where they will have about 12 months to pay back the reverse mortgage. And again, that's usually done through the sale of the home. But it can be done if the estate or the heirs want to just pay it off because they have the means to and they want to keep the home. Of course, they're welcome to just pay it back through a check, just pay off the loan, and then they can keep the home. The process is fairly simple. There is a standard application. It's not that much different than any other mortgage application. It is requires a lot of signatures. The application itself does not bind or obligate anybody to anything. It allows the mortgage lender to process the loan. There is an appraisal ordered. It is a standard uniform residential appraisal. That the appraisal is done, the appraised value and the age of the borrower and the interest rates will determine how much the borrower qualifies for. The starting age to get a reverse mortgage is 62. There is no limit to how old you can be to get a reverse mortgage. The older you are, the more money that will become available to you. Somebody who's 62 will get less money than somebody, say, who's 92. And then the appraisal is done. That will help determine how much is available for the homeowner to receive. And then that's what creates the line of credit. And then the line of credit becomes open to the homeowner and they can start taking draws off of it as they need it. There is one piece of the process that is mandatory by FHA, is required for anybody who wants to get a reverse mortgage. And that is that the borrower or the applicants have to go through what's called reverse mortgage counseling. Reverse mortgage counseling is a counseling session that's done by a licensed counselor who provides reverse mortgage counseling. That list is provided to you. You can get it online. You can get it from any reverse mortgage lender. We provide it as well. It's a conversation that takes roughly 60 to 90 minutes. It can be done over the phone or in person. This conversation is required, and it is a benefit to the consumer just to make sure that the homeowner or the applicant is having a conversation with somebody else that isn't the mortgage person. It's a conversation you have with a licensed counselor. They provide the homeowner with answers to any questions. They make sure that the homeowner understands how the product works. They make sure that all the questions that are being answered accurately and that the mortgage lender is providing accurate information. The counseling does a little bit of budgeting with the homeowner as well, just to make sure that the homeowner understands that while payments are not required on a reverse mortgage, interest is accruing on it, and the amount that somebody were to borrow today is going to be, that balance is going to increase over time. And it's important that the counselor just makes that clear to the homeowner, that they understand that it is a loan. It does need to be repaid once the homeowner leaves the home permanently, and the amount that they'll pay it in the future most likely will be more than the amount that they borrowed on the first day. Basically, like we spoke about, the biggest use of the reverse mortgage is to pay off traditional debt. Mortgage debt, which frees up cash flow. Other popular uses are paying off medical bills or helping with medical bills. One of the frequent calls that we get are from the adult child. We get calls from the adult son or the adult daughter who are helping take care of their parents, whether it be taking care of them financially or taking care of them physically, but that also can be a burden to the child. And sometimes getting in-home care can be a solution to help care for a parent. But if you've never priced out in-home care, it can be very expensive, and reverse mortgages are a popular use to help pay for that in-home care. Many times we will get calls from the adult child saying that mom and dad live in a home for 30 or 40 years. The home is free and clear, but now maybe they need some money to help pay for somebody to come in the house and help care for mom or dad, help cook, help clean, help provide just companionship. And that is expensive, and a lot of times an easy way to cover that is by getting this reverse mortgage line of credit. And you can use that line of credit to pay for that in-home care. And also, if the adult child or the adult children are helping pay housing expenses, which can be maintenance or property charges like taxes or homeowners insurance. A lot of times a reverse mortgage can be used to relieve the adult children of the financial burden to help maintain their parents' home and use a reverse mortgage line of credit to pay for that. You can use a reverse mortgage to purchase a home. That's not a widely known fact, but the math calculation is the same. If somebody did want to buy a home using a reverse mortgage, that's a great option to do so. We do the math. We put in what the purchase price is. It will then, and the age of the borrower and the interest rates, and then it will let us know how much the reverse mortgage can contribute to the purchase. And using just easy numbers, if somebody was purchasing a $300,000 home, maybe the reverse mortgage would pitch in $150,000 of that, meaning the reverse mortgage comes to the table with $150,000. The homeowner would come to the table with $150,000. That's the $300,000 to purchase the home. But now the homeowner lives in a $300,000 home with no payment for as long as they live in the home as their primary residence, but they came out of pocket with just half of the cost of the home. It is important to understand that the homeowner, while payments are not required, they are responsible to pay their taxes and insurance. Property taxes, homeowners insurance, and maintaining the property is always an expense to the homeowner. It's just the principal or the interest charges that are associated with reverse mortgage are not required on a monthly basis. Somebody asked if reverse mortgages can be used to purchase a second home. Reverse mortgages can only be used on primary residences. So you cannot put a reverse mortgage on a second home or a vacation home or a rental home, but I will give you a good example of a recent reverse mortgage that we did. We had a customer who pulled cash out of they own their home free and clear. They used a reverse mortgage to pull cash out of their home. Then they used the cash from the proceeds of the reverse mortgage to buy a condo in Florida for cash. So basically, they owned a home free and clear, therefore there was no payment on it. They got a reverse mortgage on it. They extracted the tax-free cash from the reverse mortgage. There's still no payment on their primary home because the reverse mortgage doesn't require one. Then they used that money to purchase a home for cash in Florida, and there's no payment on that home in Florida either because they bought the home with cash. It was a neat way, I thought, to utilize the reverse mortgage. And now this couple has their primary home here in Michigan. They bought a second home with the proceeds from the reverse mortgage in Florida. They don't have a payment on either of those except for their taxes and insurance. And they didn't have to tap into their savings or their retirement to pull out the cash to pay for their home in their condo in Florida. So I thought that was a neat idea. So to wrap things up, basically throughout the process of the reverse mortgage, it really requires a conversation with a reverse mortgage expert. Anybody that does reverse mortgages should be able to run numbers for you very quickly. They only need your date of birth, the estimated value of your home. Those two pieces of information will be able to allow them to let you know how much you can qualify for. There is an application process, an appraisal is ordered, title work is ordered. The credit counseling that we talked about has to be done prior to the appraisal being ordered, so that's usually done in the beginning stages of the application process. Typically, reverse mortgage process should take 30 to 45 days. And a closing does take place. It can take place at the homeowner's house. It can take place at a business. It can take place in a coffee shop. We just arrange a meeting with the closer and the homeowner. Paperwork is signed. There is a 3-day right of rescission, just like there is on most traditional forward mortgages, and then the line of credit is put in place. That pretty much is a reverse mortgages summed up. I hope it was beneficial and educational. My contact information is on the website if there's any questions that you have. If you are a homeowner who's ever considered getting a reverse mortgage, or if you're an adult child who thinks a reverse mortgage could be an option for a parent, or if you know an older homeowner who may be struggling financially to maintain their home, to pay for in-home care, to pay for taxes and insurance, or just to pay for a mortgage that they brought into retirement, a reverse mortgage might be an option for them to consider to help offset some of these expenses and free up some cash flow. And the concept really is to try to live a better quality of life. And we see that happen every day with people that apply and close with reverse mortgages with us. So again, my name is Ken Krajewski. I'm the head of reverse mortgage lending at First Nations Reverse Mortgage. My NMLS number is 168561. We are a Michigan-based reverse mortgage lender, and I hope to hear from you soon. I hope I answered all of your questions. Thank you.